If you made money, if you had realized gains, let's pay the tax on that and move forward.
Heck yeah. I see Wendy all by herself. I'm like, I'm gonna give him some questions answered.
Wendy Coggins with Virtual Tax Incorporated. I'm a 32-year tax accountant specializing in cryptocurrencies.
Tax lady.
In 2013, the company that I was working for wanted to buy Bitcoin and nobody knew how to do it. So I learned how to do it on other people's behalf. And then I got so interested in the technology because the people are so interesting. The people in the cryptocurrency arena are the brightest minds, the smartest people. It's like energizing to be involved in that. So I just decided I would be the guy that would figure it out so that I can help others to not be scared. Don't be scared if you're gonna make money and pay tax. You just report, you go through the process, and you don't have to worry. I learned how to do it. I opened a bunch of wallets, I moved a bunch of money around. I actually made money. It was part of how I was able to start my own firm, was I used my cryptocurrency profits to do that. And I decided that if nobody else knew how to do it, I may as well learn how to do it. So I put myself out there and I started taking calls from people. I talked to everybody. I answered their questions. I researched what they were looking for. Didn't matter if they wanted to put in a Bitcoin ATM machine or if they wanted to know, my buddies and I all got together and we accidentally made $1 million. Now what do we do? So I became an educator. I would talk to people, find out the situation, and look it up, do all the research, figure out what was the best way to go. And then tax season hit, and I've been doing tax returns ever since.
What does the IRS know about crypto?
So here's the thing, the IRS doesn't really know that much. They did one paper in 2014 that gave some general guidelines. And so what I use is what's called in the IRS world is the prudent man rule. What would a prudent man do? And even when these clients call and I ask them, exactly what is your situation? What did you start with and what did you end with? If you made money, if you had realized gains, let's pay the tax on that and move forward. Don't try to hide it or be scared of it or worry how it's going to be reported. If you hold it as an investment and you treat it as an investment on your taxes, you're golden. It's capital gains, it's the lowest rate. If you're a trader that trades daily and is generating a lot of income, it's going to be ordinary income to you because it's not held long enough. It's very complicated, but it's not that complicated. It all boils down to one piece of paper on a tax return. You buy a share of Starbucks for $50 and you hold it for a while and then you sell it for $60. Okay. You have a $10 capital gain. It's exactly the same way with cryptocurrencies. Now with my Starbucks stock, I get a dividend every quarter. I get like 85 cents a share. That is similar to these airdrops and these extra tokens that people get. It's kind of like a dividend, it's like extra money. Because the crypto market is so volatile, I mean, just look what happened in December. Bitcoin was at 20K, and then right there in the first month of January, it went to less than half of that. So those are not really realized gains. And so in 2017, we still had the ability to treat them as like-kind exchanges, trading one asset for another asset. But in 2018, under the new tax law, there's one line in there that says like-kind exchanges can only be real estate property. Because the IRS classifies cryptocurrencies as property because they're not a currency, they're not really a stock, and so they're using it as a property. It's kind of a catch-all. Some of this stuff will have to be challenged in the tax court. Somebody will have to get audited or somebody will have to take an aggressive approach. We'll go before tax court, we'll get some kind of a ruling, and then that will set precedent. It will take a couple years to sort it out. Everybody's worried about the SEC and who's going to regulate what. That really has a lot more to do with the ICO. It's not with the regular people who are investing. You're allowed to invest your money, you're allowed to make a profit, but it's taxable. It's a capital gain. If you're mining, that's a little different because you're in the business of creating this token. So this is self-employment income. You can deduct your expenses against it, your giant electricity bills, your computer, and you pay tax on your net income. It's an accounting nightmare because
Why is that?
Well, because your income is based on what was the value of that token when you received it. And if you're mining, you're getting little tiny bits every day, every hour, it's a lot of transactions. Somebody needs to invent some really good accounting software specifically for miners.
Okay, so let me just like get this. Okay, guys, if you're following me, okay, comment below if you don't get it. Comment below if you get it and I don't get it. Just comment below, like, subscribe, share. I love you guys. Okay, so if you're investing and you make money on your investment, that's a capital gains tax.
Correct.
If you're mining, it's like owning a small business,
exactly.
And you can get tax write-offs off of your cell phone, your mining, little plot of land in Iceland.
Yeah.
Okay. Electricity, all that. Now, if you were, this is just in the U.S. or is this world? Like, if I have mining operations in Iceland, not that I would.
Yeah, as a U.S. citizen, you're required to report all worldwide incomes from every source. But because we have tax treaties with most countries, there's no double taxation. So if you mine in Iceland and you're having to report in Iceland, you still have to report in the United States, and then you take a credit for the tax that you paid to Iceland. So there's no double taxation, but U.S. citizens are required to report their income from all sources, regardless of where they come from.
That's crazy.
That's the rule. That's the tax law.
Now, is it just the U.S.? Is everybody doing that?
I can't say what other people do in other countries, but I won't take a client that's in a country that doesn't have a tax treaty with the United States.
Makes it a little harder to deal with.
It puts me at risk.
Got it.
Because if people are avoiding the law and they're doing it on purpose, that's not what we want to do. We want to make sure we just pay only our fair share of tax and not a penny more. And that we take every possible consideration and deduction to keep that tax as low as possible.
Got you. Now, I just want to be silly and challenge something here. You said there's no such thing as double taxation.
Unless you're a C
Boston.
Corp, there's double taxation, but there's not supposed to be.
Yeah, unless you're. I don't even know what that
chapter.
means.
That's a whole other day.
That's another chapter. Wait, it's all over my head. But now they tax. I'm just gonna like change the subject. But they tax our income and tax goods, and they tax our income. Now, is that
But
considered
that's-
double taxation?
That's the federal government taxing you, and then the state that you choose to live in taxing you. In Hawaii, they have excise tax, even on services.
What's that?
Excise tax is kind of like sales tax, but it's even on services, not just on goods. But those are state laws. Those are state by state
I understand.
laws. So, yeah.
There's just no avoiding this tax thing, you guys.